Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. So market at the low point of the day. Take a look at Sensex Nifty is showing a fair bit of losses at this point and in fact at the low point of the day. But what's doing worse is the mid-cap universe as well as the banking space. So Nifty Bank as well as mid-cap index, they both are down 0.7%, much higher than what the frontline indices are showing. And it's also to do with ICICI Bank, which is one of the big draggers, but HDFC clearly remains the key performer at this point. Market breadth is looking weak at this point, Sonia.
Oh, yes, it is. And I think, as we've been pointing out, it's the Bank Nifty that's really dragging the markets today. Yes Bank, ICICI Bank, IndusInd Bank, it could just be profit-taking because many of these banks have done really well this month. I mean, ICICI Bank is still up 10% for the month. So maybe some profit-taking is what you're seeing. And some of the other heavyweights like ITC also under pressure. But let's tell you what's happening across the globe because the European stocks have opened higher this afternoon. Leading central bankers are meeting for an economic symposium at Jackson Hole where they will discuss the future of the monetary policy. Most crucial is the Fed Reserve Chairman Jerome Powell's first address as the Fed chair at the meet. Asian markets closed mixed as the US-China talks ended with no breakthrough. And Scott Morrison is to be Australia's new Prime Minister after Malcolm Turnbull was forced out by party rivals in a bruising leadership contest. But back home, the buzz for the new Axis Bank CEO gets louder after HDFC Standard Life's Amitabh Chaudhry sold a little over 2.5 lakh shares between August 20 to 21st. Lata's here on what she's picking up. Lata.
Well, what I picked up has not got anything to do with Amitabh Chaudhry selling shares in HDFC Life. Independently, an unimpeachable source confirmed that Amitabh Chaudhry is all set to take over as the next head of Axis Bank. That clears a lot of uncertainty. I guess the formal announcement will come sometime, but it's important that the source clarified that it is Amitabh Chaudhry, and therefore HDFC Life investors as well as Axis Bank investors have to take a call on this new person. Very widely and well regarded, Amitabh Chaudhry started off his career as a banker in 1987 in Bank of America Merrill Lynch and worked there for almost 2 decades. In 2003, he joined Infosys BPO company, was there for about 7 years, and then 2012 joined at HDFC Life. So while you may complain that he's away from banking for 15 years, he has been in the financial system last 5 years and has been a career banker for almost the first 20 years of his life, believed to be an excellent head at HDFC Life. So, well, HDFC Life's loss is Axis Bank's gain.
All right, Lata, thanks so much for getting us all those important details. So the CEO's search for Axis Bank may just be over very, very soon. Take a look at how the stocks have been reacting. HDFC Standard Life at the low point of the day currently. Axis Bank is gaining in trade, and HDFC, remember the parent of HDFC Standard Life, is at the high point and the biggest contributor. But what's really not doing well is Hexaware. Take a look at that counter, almost 13% down in trade today, and that tanks in trade after 2.8 crore shares worth about 1,253 crore rupees trade in multiple blocks. Let's take it straight to my colleague Nimish Shah, who is joining us with all the details of this block deal. Nimish.
Barings Private Equity has sold 8.5% stake via block deal today. The block was offered at a 10% discount. So obviously we saw that big selling pressure on that stock. The critical point why the stock may not react or recover very soon is that Barings Private Equity owns 71%. They sold 8.5% stake, and the buzz in the street is that maybe they want to bring it to 51%. So which means there is a further hangover of close to 12-13% stake, which might get sold in the months to come. Typically in block deals there is a lock-in for 3 months. So for the next 3 months there may not be any large selling coming in, but the fact that there is still a hangover of 12-13% from Barings Private Equity which may come in Hexaware, that is the reason why the stock is not pulled back, And that's been the case with MGL as well. Yesterday we saw the stock down 8% after British Gas sold close to 9% stake. So that's been the pain point for Hexaware as well, given that Barings Private Equity, which is the owner of the company, has sold at 8.5% stake at a 10% discount in block deal today.
Okay, well, remember, Hexaware has been a big wealth creator in the past. Even after this 12% fall, it's up 30% for the year. So a lot of analysts have indicated that the going has been very good. Perhaps it could be a good buying opportunity. That's what experts have indicated to us earlier in the day. But let's talk about L&T. It announced a massive 9,000 crore rupee buyback. We did speak exclusively with S.N. Subramaniam, the MD and CEO of L&T, and asked him whether they are looking to maintain the FY19 revenue guidance. Listen into what he had to say.
Don't see anything massive happening. Things are positive, so let's remain positive and let's hope that things go in the same manner. Please, this year is a little difficult year from an overall point of view. We have 3 to 4 very major states which go for elections. We have during the financial year the general elections which are due, and as is the norm in a truly democratic country, the governments are not allowed to take some decisions during the process of elections, which is a correct thing to do. And therefore, having said that, when 4 major states and the country by itself is going for elections, there will be some delay in decision makings. And these have been factored into the guidance and the numbers that we have put forth. The net worth continues to grow up because the reserves keep building up. So one of the ways is to not only look at the numerator, but also to look at the denominator, which is net worth. And by giving back money to the shareholders, you're keeping net worth within a particular range, and thereby the ROE increases. My guess and the way we look forward with optimism is that the ROE is on track to become 18% in a year or two, and we'll hold on to that way as we see it.
All right, so that's Larsen & Toubro, and that stock showed phenomenal growth right after the buyback announcement. In fact, today, right now, it's at the low point of the day. It's time for a short breather on the show, but up next, remember, an exclusive conversation with Sanjay Jalona, who's the CEO of L&T Infotech, on the company's growth and acquisition plans going forward.
Well, I agree the market is under pressure today, but that doesn't mean there are no outperformers. So a lot of stocks in the broader market looking very good. Apollo Hospitals has given you 30 this month alone, and day after day it's been sort of gravity-defying move. So now up almost about 4.5% there. Emphasis from the mid-cap IT space has also been a terrific performer, up 75% this year, and now up almost about 3% or so. Well, let's move on and talk about some more stories. The deadline to resolve assets under the RBI's Feb 12 circular is coming up on the 27th of August. That's on Monday. And CNBC-TV18 learns that at least 80 large accounts across banks will be impacted by this circular and are likely to end up in the bankruptcy court. Ritu Singh has exclusive details on this story, and she joins in now. Hi, Ritu.
Hi, well, 27th August is actually Monday, the D-Day to watch out for, because that is when the 6-month deadline given to bankers to resolve assets under the Feb 12 circular comes to an end, failing which in the next 15 days they have to take defaulters to the NCLT for bankruptcy proceedings. We understand from sources that at least 80 accounts may be impacted because of this notification across several banks. The largest sector that will be impacted is power sector, which constitutes almost half of the cases that fall under this category. In fact, banks are hopeful that they can resolve some of these assets before the deadline ends. They've identified 7 power assets. There's some individual accounts here and there that also they're hoping to close before that deadline ends. But at this point of time, it seems very unlikely given the short amount of time available to them. The largest banks that get impacted are State Bank of India and IDBI Bank with 40 accounts each. There's also ICICI Bank with 32, PNB with about 35, and Axis Bank with 23 accounts that will get sent to NCLT because of this circular. In the power assets, the largest accounts are Deprakash Power, there's Lanco Amarkantak, Ratnagiri, GMR, Jindal India Thermal Power, SR Mahan, and in the non-power sector, it's the usual suspects, Reliance Communications, Punj Lloyd, Gammon India, Reliance Defence, amongst a whole host of others. This is by no means an exhaustive list. There are many more accounts that could feature on this, but this by itself will have a severe impact on banks.
All right, so 27th August is the D-Day, Ritu, but those were the NCLT cases of future. But let's talk about one of the cases under NCLT, and we are talking about Ruchi Soya. So the lenders approve resolution plan submitted by Adani Wilmar, and the stock is locked in upper circuit, though it's a penny stock. Ritu Singh has all the details. Tell us.
Well, you know, yesterday in the Committee of Creditors meeting, finally about 96% of the lenders voted in favor of Adani Wilmar's plan for Ruchi Soya. This involves about 6,014 crore rupees, in which about 4,300 crore rupees is the repayment to lenders, amounting to less than around 55% haircut, and the remaining 1,714 crore rupees is what will be the equity infusion in the company. Remember, Patanjali and Adani had bid in 2 consecutive rounds to secure, this place, and now finally Adani Wilmar's plan has been approved. The largest lenders that do stand to benefit with this are State Bank of India, ICICI Bank, IDBI Bank and Punjab National Bank among the 24 financial creditors that Ruchi Soya has an exposure to. Also take note that Adani Wilmar has already secured a CCI approval for this deal even before that lender approval came in.
Okay, Ritu, thanks a lot for that. Well, that's about Ruchi Soya and that deal. But Jet Airways has been the stock in focus these past few weeks. It will finally declare its Q1 results. Ruchi Soya and that deal. But Jet Airways has been the stock in focus these past few weeks. It will finally declare its Q1 results on the 27th of this month, which is on Monday. Now, we're just trying to put down a few facts as to what the issues for Jet Airways are. On the balance sheet front, of course, the key issue really is not the debt, because the debt has been visually falling, optically falling for Jet Airways. The key issue is the rising trade payables. Remember, non-payment to creditors is the key issue for Jet Airways, and the trade payables have almost quadrupled over the last 5 or 6 years for Jet Airways. Inability to meet supplier obligations have resulted in delayed payments, and that shows even in their borrowings. So they have been borrowing at a very high coupon rate of almost 20% in order to make the repayments, and that really is the stress point. Apart from that, of course, we know the profitability issues for Jet Airways. Compared to their peers, their margins have been falling. In the year gone by, Jet Airways margins have fallen to 3%, while peers like Indigo and Spice have actually seen an improvement in margins. Not just that, Jet Airways has been loss-making for 5 out of the last 8 years, and their revenue and cost per seat kilometer has been extremely warped. So at a time when Indigo is actually making money on the, per seat kilometer, Jet Airways has been losing. So a lot of issues really to deal with. The management has said that on Monday they will come out with some cost reduction efforts as well. But the need of the hour really is equity infusion. So let's see if any of that is announced. A quick disclaimer that CNBC-TV18 does not recommend the stock. It's not a buy, not a sell. It's purely some research analysis.
All right, thanks for that, Sonia. Let's take it to a corporate voice then on CNBC-TV18, and that's an exclusive. Sanjay Jalona, who's the CEO of L&T Infotech, expects FY19 to be better than FY18. And speaking to our colleague Kritika Saxena, he adds that the company will focus on acquiring smaller companies.
From your perspective, will FY19 be better than FY18 from L&T Infotech?
Definitely from LTI's perspective, we will see continued growth. We had FY17, we had around 10% growth. FY18 was around 17% growth. Where we sit today, we still have a few quarters to go, but we are very confident that the growth will continue.
Okay.
So we are quite positive, and you're seeing a rebound in the IT industry overall here.
Yeah. Do you think that the clients that you're working with, especially in North America, financial services clients, who had kind of hit the pause button, do you think they have more confidence now to be able to spend on discretionary spending?
I think that's what we are seeing. We are seeing a lot of discretionary spend come up there. Tax reforms have helped the companies. The companies are performing a lot better. Everyone's revenues and profitable growth is happening. So they are definitely finding newer ways to connect with the customer, keep the regulatory pressures on, spend a lot of money on analytics and so on and so forth. So I think there is a lot of positivity in the industry overall. And this is across the verticals.
Given the kind of discretionary investments that have gone into digital, what's the next target for margins?
See, we want to keep the margin at the band that we are in and focus on, and when you grow fast, you have additional margins that come into your kitty. We want to invest it all back into the business and grow faster. Our whole target has been keep the margin where they are. We are a growth company. People should look at us as a growth company. We want to push everything onto growth, whether it's acquisition, whether it's building capabilities, all that, hiring right sets of people, that's more important to me.
You spoke about acquisition. What's the next big target, Sanjay, for you? You made very interesting acquisitions till date. What specifically are you looking at? Would mid-cap IT companies interest you? Would it be scale, or would it be specific skill sets or specific product-driven IPs that will interest you?
Look, you never say never in an acquisition. But typically, my mind is that we want to acquire for capabilities rather for size, right? In today's world, customers are not hiring you for scale. Customers are hiring you for expertise and capabilities. And that makes us move towards hiring companies with strong capabilities. They typically will be smaller companies. That's what you have seen us do. We have done 2 acquisitions in the last couple of years. But if the right opportunity comes, size should not be a problem. We have a strong
You will
support.
not shy away from making a big bet, if needed.
Absolutely not.
You can watch that interview tonight at 10:30 p.m. on our show CNBC TV18 Weekender. But moving on, the NCLAT refuses to stay Tata Sons' conversion into a private company. To get us an update on that case, Ashmit Kumar joins in with all the details. Ashmit, over to you.
Right, so the NCLAT passing orders giving interim protection to Cyrus Mistry against the possible ouster from Tata Sons with respect to his 18.4% shareholding. Keep in mind that Cyrus Mistry had moved the NCLAT. His essential challenge was, the immediate challenge was to restrain Tata Sons from transitioning from becoming a private limited company from a deemed public limited company. The reason for that essentially is that the articles of association which govern the relationship between the shareholders and the company, once Tata Sons made that transition into a private limited company, it would then have the powers to act under Articles of Association, Article 75 to be specific, to pass a resolution, a special resolution that would then direct a shareholder to sell his shareholding, which in this case would happen to be Cyrus Mistry, who has an 18.4% shareholding. So that was essentially the fear that he had, Cyrus Mistry had, in a potential ouster. And in arguing against that, the NCLAT has passed a 2-part order. Now the NCLAT, the first part is, as far as the transition itself is concerned, well, towards that end, keep in mind that the ROC has already passed an order that now deems, that has now held Tata Sons to be a private limited company. No stay has come on that. The larger question on whether or not Tata Sons can make that transition, that question still remains, but in the interim, no stay has been granted, so effectively Tata Sons continues to be a private limited company. Having said that, the second part is equally important. This is where the interim protection for Cyrus Mistry comes in. The NCLAT unequivocally has directed Tata Sons to not act under the Articles of Association, to not pass a resolution, a special resolution under Article 75 that would enable them to direct Cyrus Mistry to sell his shareholding. So towards that end, interim protection coming in for Cyrus Mistry. But the larger question about the Tata Sons and whether or not they can make that transition, that question is still alive, but there is no stay on the ROC order. So Tata Sons effectively continues as a private limited company.
All right, Ashmit, thanks so much for the latest in the biggest corporate battle that India Inc. has seen, and lots more to be seen there. With that, we'll slip into a short breather on the show, but time for that. And up next will be a lot of sports action for day 6 of Asian Games, so stay tuned for that. Welcome back. You're watching Business Lunch. As far as key indices are concerned, 0.2% down at the moment, but the mid-cap space has really recouped, has gained some strength in the last half an hour of trade, we will say. And some of the counters like Apollo Hospitals, RBL Bank, Emphasis, Tata Chem have really given it that contribution. But one stock on my radar is Future Enterprises. It's knocked off to the low point of the day and continues to fall more than 2% down at the moment. So keep that particular counter on your radar. Let's take it straight to an exclusive then on CNBC TV18. An IDBI Federal Life stake sale is on the back burner, is the word coming in from Vignesh Sahni of IDBI Federal Life in conversation with my colleague Yash Jain. And here's an excerpt of that conversation.
Now, with both those potential buyers, Max Life as well as Aditya Birla Sun Life backing out, is that stake sale process out of the window completely, or is there any sort of possibility of restarting it in the short to medium term?
You know, Yash, for the last 15 months I used to get a lot of phone calls, 3 phone calls a day from you, your colleagues in other publications asking me what's happening. But last 4 months I've not got any call from anybody, so I presume it's on the back burner.
Okay.
No one called me regarding the stake sale. No one from the media has called me for the last 4 months, so I presume it's on the back burner.
Right. Any possibility that you see of restarting that at any point?
Well, that's a shareholder decision. That's totally shareholder discussion, debate, and discussion.
Right. In your understanding, was it the 2 potential buyers backing out of the deal, or was it the entry of LIC when it comes to the parent bank which led to the end of road when it comes to the stake sale for IDBI Federal Life?
I think both happened at the same time.
Right,
So I think around the same time. So it could be a combination of both things.
As far as any talks of merging IDBI Federal Life with LIC is concerned, now that LIC has a majority stake in IDBI Bank, are there any such discussions or thoughts?
I've not heard of any such thing. I have not heard of any such thing.
As far as LIC and IDBI Federal Life as a step-down subsidiary is concerned, do you think it would make sense for LIC at some point of time to grow business here at IDBI Federal Life also, and at some point of time list IDBI Federal Life on the exchanges?
Again, yes, with a selfish interest, I would say yes, but it's completely a shareholder decision. I would like to believe that they think in these lines, but it's their decision at the end of the day.
Okay, well, moving on to the action from the Asian Games. How can we end this show without giving you an update on that, right? After a muted day 5 at the Games, India saw a gold rush with 2 gold medals added to the country's tally. Rohan Bopanna and Divij Sharan won the tennis men's doubles category by defeating the Kazakhstan pair in rowing. Savarn Singh, Dattu Bhokanal, Om Prakash and Sukhmeet Singh won India's second gold medal of the day in men's quadruple sculls. So not bad at all.
Oh, not at all. And the best rower in the 2013 National Championships, Dushyant, finished third in single sculls, while the duo of Rohit Kumar and Bhagwan Singh added the 12th bronze medal in double sculls. And shooter Hina Sindhu, she bagged a bronze medal in the women's 10 meters air pistol event. And this is India's 9th shooting medal at the Games, remember, and India's medal tally currently stands at 23 with 6 gold, 4 silver and 13 bronze medals.
Okay, that's a great way to end the show, right? Well, on that note, let's do one thing. Let's wrap up Business Lunch. Midcap Radar will come up for you on the other side of the break and take you through all the market action.